Thanks so much for tuning into the Trade Setup. I'm Neeraj Shah. Good morning, and it's a decent last 12 to 18 odd hours, simply because India has gotten the news that everybody above the age of 18 can be vaccinated. We put out this news on the Twitter timeline yesterday as well. But that notwithstanding, irrespective of whether it was there or no, the fact remains that this is this big news that everybody above 18 is eligible for vaccination from starting May 1st. So this should soothe a lot of frayed nerves. It should bring about, it is good news in an otherwise fairly distressful scenario around us in India, right? Wherein every day you hear of shortage of beds, shortage of oxygen, shortage of medicines. There's this whole bad news psychosis around us, and this kind of is a glimmer of hope, so to say. So some good news in otherwise dull thing, and I think that probably should do the trick for Indian markets as well in a bit. I'll come to that in a bit. First, let's talk about the globe. I think the globe is looking a bit tepid today. You would have to admit. Nasdaq, Tesla led Nasdaq lower. I mean, a lot of other tech stocks came off in the session yesterday, and tech was the principal culprit because of which the US markets came off, and the futures seem to be trading flattish. And this is in a way impacting the Asian screen as well. Though Nikkei has reasons of its own why it is down. It's down about 1.8% Nikkei, and that's or 1.9% now, and that's kind of isolated, I must say. It's not that all the other indices are actually doing that. So the others, and don't look at the SPCNX Nifty here, that's yesterday's code, but if you look at the moving code, which is the Asian screen, they are all flattish to marginally lower, in certain cases marginally higher as well. In fact, I think buoyed by this development of vaccination being open, I think the Indian markets could actually be doing okay today. Let's bring up the SGX Nifty. Yeah, about 73 odd points, and we had a fairly sharp fall in trade yesterday because of the lockdowns, etc. So we had an isolated move down yesterday, and we might well have an isolated move of some bit of resilience in today's session. Again, I don't know if this will last. Like I said yesterday, while it was anticipated that there will be a corrective move, didn't quite know how much it will go lower. And in today's session, you might well have an outing which is slightly better in the session, because one must remember that even in yesterday's session, while the Nifty was down about 2.5% at a point of time, and the Bank Nifty was corrective, I think both Bank Nifty and HDFC Bank individually as well came off from the lows of the day. So the trade setup, frankly, if you look at the trade setup today, you have to take heart from the fact that HDFC Bank and Bank Nifty showed strength on Monday from the lows, which actually augurs well. I don't think there is a material risk appetite, but the setup is certainly attractive for contra longs. And like I said, I mean, this government allowing vaccination for people above 18 years could provide that right fillip to sentiment. The sentiment is just around that. If you look at certain quant indicators that are available that some marquee investors use as well, it's around the levels from where you could probably initiate some contra longs. Now, again, like I said, this could be very selective. For example, IT may actually have a slightly tough outing in the next couple of days, looking at what Nasdaq, etc., is doing. And remember, Nifty IT came off a little bit in trade yesterday, but banks might do the trick today or the next few days. So real estate might do the trick. So those are a few things that you got to be careful about. Pockets which could do really well, even if the markets stay flattish to maybe marginally lower. Interesting set of earnings today, and I reckon that the markets will look for beyond Q4 earnings. So Nestle numbers, however good they may have been for the March number because of the low base, I think the markets will want to understand if indeed these micro lockdowns have an impact on rural India, and therefore would the earnings of Nestle be impacted going ahead. Similarly, 3 or 4 very interesting mid-size, small-size names. 5 Paisa Capital comes out with numbers, and remember, online brokerages have had a terrific run. But the last 3 months, because of the new margin rules, okay, I think the graphic seems to be stuck, but because of the new margin rules and otherwise, there is some issues around 5 Paisa Capital or some of the online brokerages volumes. So that's interesting. Tata Steel Long Products or Swaraj Engines, all of these could be very interesting names to monitor in the session today. What about the stocks to watch today? I think I'll spend a little bit of time. There are very few names that I've given. I'll read out some brokerage views that have come out slightly later in the day. But first, ACC could well turn out to be the stock of the day, and I would watch out for Ambuja as well, by the way. But these are the numbers from ACC, right? Revenues at 4291. The estimates were 4216, Bloomberg estimates. So they did better than that on the revenue front. They did extremely well on the EBITDA front. The estimates were 751 crores. They came in at 860 crores. Net profit 562 crores versus estimates of 462 crores. So pretty strong show put up by ACC. Most importantly, on the operational side, I mean, the cost curve was really contained well, as a result of which ACC delivered very, very strongly, even compared to estimates on the EBITDA front and thereby on the profit front. Now, multiple brokerages have come out with the verdict on ACC. I'm reading out CLSA on ACC, maybe, or CITI on ACC. Either of the two. CITI on ACC was a pretty strong note. Let's bring that up. They put out, they are saying that ACC for them is their strongest pick in the current scenario. I'll read out. They are saying that the EBITDA is ahead and the cost focus continues, which, as a result of which, ACC is the top pick for CITI. They maintain a buy rating and a target price of 2600. They are saying that they expect the industry utilization to trend up and price hikes to offset the cost inflation. And at an EV per ton of $95, ACC trades below historical EV per ton peaks, and that's why they prefer ACC in the current scenario. By the way, Macquarie has also had very positive things to say about ACC. They're saying that the growth and cost efficacy programs are on track. The EBITDA beat is driven by lower costs, volumes, and realization in line. Their target price is 2191. Almost all brokerages, Jefferies has raised the EPS estimates by 8 to 9%. So almost all brokerages have given a thumbs up to ACC earnings. Do watch out for ACC. Do watch out for Ambuja as well. That could actually have a decent outing too. So cemented large, but ACC, Ambuja individually could actually do very well. So do watch out for both of those. I think I'll watch out for ICICI Pru Life as well. Brokerages have given a thumbs up to the numbers. So CLSA, for example, has upgraded the stock to a buy with a target price of 575. They are saying that the fourth quarter is in line with 27% AP growth versus a contraction of 27% for the 9-month period ended. Remember, a few brokerages have been slightly, how do I say, circumspect about what some of these life insurance companies could do because of the rising cases. But quarter four certainly in line. This is an underperforming stock. And CLSA is saying that while FY21 saw multiple headwinds with big contraction in ULIP business, the change in distribution strategy and repricing challenges, the fact that all of this is probably showing signs of reversal in quarter four, and therefore the base for FY21 is also good, might help ICICI Pru. So therefore they are bullish on this one. So let's wait and watch if ICICI Pru has a positive reaction. CITI, of course, maintains a buy with a target price of 600. And they believe that the premium growth has improved quite significantly. So therefore, watch out for these two. I dare say watch out for pharma in general as well. It's a sector that is showing some promise. So Morgan Stanley, for example, has a note on Dr. Reddy's wherein they are maintaining the overweight and maintaining a target of 5859. This is Morgan Stanley. They expect about 25% EPS CAGR for FY22-23, which is pretty strong, by the way, for the company that size. So do watch out for that. And I think some brokerages have downgraded the healthcare stocks, like, for example, Dr. Lal Path Labs, wherein I think CLSA says that the valuations have just run through the roof. So these are a few names that all of us should be watching out for. All in all, expect cement to do well. I somehow believe that real estate could show a bit of a bounce because it was a materially beaten down sector. And you could well see a bit of a bounce out there because of this whole vaccination drive program. Those are the things that you should focus on. Be mindful of technology because NASDAQ is underperforming. And because we saw a bit of a downdraft around certain stocks yesterday, you might well have that pocket slightly staying under the weather, if at all, for a day or two. But it's a strong space, which will probably see some strong buying at lower levels. So don't put it out of the reckoning, just that the near term could have maybe a little bit of pressure. Thanks so much for tuning in. Stay safe all. We've gotten good news about vaccination. Let's hope we as a nation make the use of that and try and combat this virus very, very quickly. Stay masked though, even if you're vaccinated or you're not. If you step out, please stay masked. Thanks so much for tuning in today.